Welcome. In this video, we will talk about ICICI Prudential Value Discovery Fund and an update on the Pharma Fund's recommendation that we have been running in our series. The concept of identifying value is a business which has very high potential for growth, while there is some external condition that is blocking its growth. Once that block is getting unblocked, these stocks fly high to become multi-baggers. These value funds identify such kind of stocks and invest in them to give huge returns to its unit holders. In the current scenario, pharma and software sector, the technology sector, along with automobiles and cement, have been doing extremely well in the market today. If we have an opportunity to identify a fund that has more exposure to these four sectors, pharma, software, automobile and cements, then we have an opportunity to grow our investments with very big profits. In such search, we got one such fund, which was ICICI Prudential Value Discovery Fund. This fund has been very popular in our country. It's been there for I think more than 10 plus years. It has an asset under management of about 15,000 crores, managed by a very popular fund manager, Shankaran Narain, who comes with 2+ decades of experience in the market, who has brought a lot of ideas and a lot of concepts which has proven to be working in the market. This fund has about 43% exposure into software, technology and automobile stocks. They don't have cements, only one stock in cement they have. When such high exposure is there into stocks which are high quality, and most of them they hold are like businesses in pharma, they are holding Sun Pharma, in automobile they are holding M&M, and in technology they are having Infosys. These stocks, the growth in them is so very high. Sun Pharma for the last peak alone gave 10% returns. Infosys has run up 25% in the last 1 month. Though this fund has been running up big time from March onwards, it went up from about 97 rupees NAV to 144 today. If somebody has to invest into this fund, still there is momentum left in it to grow because of the quality of the stocks they are holding as well as the strength that is there in the sectors. As of now, they are having about 25% of their exposure in stocks that are fairly confused or bearish, going down. When they do a churn and move this bad quality exposure to good ones, that will add up to more strength in the fund. So suppose somebody wants to invest into this fund at current NAV of 144.65, it is having a protection at 138.11. What this means is, if suppose I am investing in this fund at the NAV of 144.65, if it goes against me, that is market turns down for some reason and it goes down, I have to get out at 138.11. This brings about 4.52% of risk on this investment. Any investment in mutual funds, at least in the equity side, carries risk, while if we are able to mitigate that, keep it as low as possible on your overall investment, that gives potential for us to grow our investments. So as of now, 100 rupees invested into ICICI Prudential Value Discovery Fund has a risk of 4 rupees 52 paisa in it. So somebody who wants to invest now, if suppose you are planning to put 100 rupees, buy at current NAV for 25 rupees, wait for a correction of say 0.5 or 1% and keep adding another 25%. Thereby you will get your investment at a lower risk. So this with ICICI Prudential Value Discovery Fund. Going forward, whatever is the stop losses for the fund, we will be publishing it on our website. Then coming to Pharma Fund update, last week Pharma funds had an extremely high potential, high growth rally. Stocks in the pharma sector, all the leading stocks went up between 7 to 15%. And mutual funds generally carry high exposure into large businesses in the sector. So all the funds that we have recommended, all the 3 funds, SBI, UTI and Nippon, have done extremely well. All their stop loss have gone very high. These funds in the last 2 months have given about 15% returns from the time we recommended. Stop losses for these funds as of now, again, all of them are carrying around 4 to 4.5% risk. You can go to our website. There is a link provided on the video on our channel. You can click on that, it will take you to the website which will have all the stop losses given on a regular basis. Those who are invested into pharma funds, there is some more steam left. If suppose you have taken part exit last week as we had recommended, continue the balance position with the stop losses, which is going to be modified every week. When the stop loss gets triggered, you can get out, giving your money to have biggest growth. So as we have broad-based our analysis here on this mutual fund series from pharma to cover other funds also, the stop losses for all the funds will be henceforth given on a weekly basis on our website. Link is provided below in the page here. You can use that link to help your investments have better exits and grow your savings. Thank you.